for jobless claims coming in at 428,000. Not good news here, trending higher. The estimate by Bloomberg economists, or economist survey by Bloomberg, was for 411,000. It also represents a gain from the prior week. This is the week ending September 10th. Also, the consumer price front, inflation a little bit higher there, 0.4%. That is 2 basis points basically higher than, or 2 percentage points, 2 basis points, excuse me, higher than what we had been expecting in the survey. For core consumer prices, pretty much in line with estimates, just by 0.2%. Also, Empire Manufacturing coming in a reading of negative 8.82. That is lower than the reading expected at -4. Economics editor Mike McKee joining me. And Mike, what do you make of the fact that we seem to be getting, moving higher and higher from that 400,000 level in jobless claims?
Well, that is not good news, Betty, because if we are sinking into recession, you're going to expect companies to start laying off workers in anticipation. And maybe that's what we're beginning to see. Don't have a clear read on exactly who got laid off where or why. But it is not the kind of move you want. We were hoping that we would get closer to the 400,000 level, while at the same time, we're getting more inflation. This complicates the Fed's job a lot next week as they think about doing some additional easing, because on a year-over-year basis, we see consumer prices up 3.8%. Yes, they look at the core. Well, the core is up 2%. That is what Ben Bernanke says he looks at, and that's his target. They're already there. We're seeing big increases, and what really strikes you about CPI is increases across the board, just about everything, not only energy, but a big increase in food. And then in the core, you get a rise in medical care, a rise in housing, a rise in recreation, and a big rise in apparel costs, by the way. Just not good news. Same thing we're seeing in the Empire Index. And as Dom was pointing out, everybody's going to be looking at what this means for the Philadelphia Fed Index. It comes out later today. Usually the two not well correlated, but it's going to raise some fears in the markets, because not only does Empire fall for the 4th month, it surprisingly falls, but we see weakness in new orders, weakness in shipments, weakness in hiring, and also an increase in prices paid and prices received. So right now, you've got the economy slowing down and inflation rising. Not a good recipe if you're the Fed trying to figure out what to do, Betty.